All right, in this video, we're going to check out Tesla on a daily, also the weekly on Tesla, UWT, DWT on maybe the daily, weekly, monthly time frames. And the reason I want to make this video is a viewer played Tesla. Um, they heard about it a couple weeks ago, how it was coming down. It's been crashing for the past few weeks, so they've been paying attention to it. And this is the trade that they got into, which is really cool. Now, I wasn't in this trade, but I just, I find it very inspirational when you have somebody text you and say, "Hey, man, I got Tesla at 185, and I just sold it today for 214." Pretty cool. So this is what they did here. They played the daily. Okay, as you can see, they bought above here, and then their stop loss was put. This is how the strategy works, just below this candle. You see, the previous candle never went below. And you can say, well, the daily was touching here, right? It was touching here. It absolutely was right here. You can see my cursor bar on May 22nd, but this candle never went above this candle. This candle never went above that candle. Actually, it did by 2 cents, but the rule is a nickel above or nickel below. So a nickel above if you're buying for the upside, a nickel below if you're shorting. So this candle never went above that candle, and you can keep doing this each day because this is a daily time frame. And this candle never went above this candle. This candle never went above this candle. This candle never went above this candle. This one did. So here, when this candle develops, we don't have this candle. So you put your order at 187.02, roughly, 187. Then we can zoom in and get very, very particular on it. We're not going to do that right now. And then your stop loss will be 176. So a $10 stop loss per share. And we ran to 216. I mean, you can also use this tool over here to see what your risk to reward ratio is, which is right here, this long position. You put it here, you run this up, you go like this, that's your stop loss. You're in this position. Just to see what they netted, what the risk to reward ratio was. And that was almost 3 to 1. Anything in trading 2 to 1 is awesome. 3 to 1 is even better. Even higher is even better than that. Okay. So they got out today. You got the RSI. They wrote it from down here in the bottom 0, 1, 2, 3 area, and we're here. The daily's touching. All right, we're at 100. You can see over here if you look to the left bottom left corner in the stock RSI right next to it says 98.83 and 98.18. It's probably a good time to get out. They got out I think at 214 today, which is basically $2 from the top. Awesome trade. And then if we go to the longer time frame, let's see if there's anything on the weekly here. And the weekly, wow, weekly looks pretty good too. That's Tesla. I'm gonna go to KOHLS, and we are going to. This is something that we're looking to play this week. And zoom in here. Here's a candle right here. We're touching here. Look at my cursor. We're touching here at the bottom, June 3rd. This is last week's candle. This is to this week's. Waiting for this week's candle to break above. Okay, which would be around 51.40. Put an order in 51.40 to fill it. Stop loss would be $47. So $4 stop loss per share on the weekly. But let's see what the weekly cycle netted. Okay, so these weekly cycles are ranging from, let's see over here, $74 down to $47. All right, so over here, 0. So that's about a $25, $30 move. And then you go over here from 58 to 71. It's 20 to 30 bucks. The weekly is netting you between $15 and $30 moves. So the weekly, there's definitely some gain in the weekly. When you start using smaller time frames in the blue chip stocks, KOHLS, McDonald's, Lowe's, some people, there's not a lot of profit on the smaller time frames. You're better off with the larger time frame, weekly, monthly. The trade takes between 4 to 10 weeks, depending on how long this oscillator takes to move up and down. You can kind of go look left and you can see, okay, here was let's see, was that February 11th? It topped off at March 5th, almost a month. And then from March 5th, took it from March 5th to March 25th. So another 20 days, 20, 30 days for the weekly, the cycle. And then here, we're going to check out UWT, DWT. Let's hide all this. Let's hide all this Fibonacci stuff. All right, so, okay. All right, so we had some people get on this trade. They're still in it. A few people are still in it. The trade was here. This candle, the buy was above, just above it, just above the candle. It's right there. And the stop loss was just below it. It's right there. Let's take that off. Take that off. Take that off. And they're still in it. The daily could have a fake out, but if you're in it at 11.75, went up to 12.75. You got to move your stop loss to at least even at this point. You can have a fake out on the daily, and how you can tell is just go to the weekly to see where. So the weekly's not down all the way. So there's a possibility this has a little bit more to go down. Maybe it goes down to 950, 989, somewhere around this range, 970. Weekly would be a better play on the UWT. That's it, guys.